Hey, what's happening? This is Jerry with Wealth Dynamics. Thank you for tuning in today. I have one topic I'm going to share with you over the next 2 to 3 minutes, and that topic is how to invest with life insurance. Now, if you don't know me, I've got to apologize. As always, I'm Jerry. I own Wealth Dynamics. I'm a Grant Cardone certified coach. I am the person that's going to help teach you how to treat money like oxygen. One of the tools that I'm going to use to get there is life insurance. Now, life insurance, if you structure it poorly, can make you lose a lot of money, just like a real estate deal, just like a car loan, just like a stock market deal. Now, I want to talk to you about how you use it to invest. Here's the sequence. You have to invest if you ever want financial freedom, period. Otherwise, you'll always trade time for money, back and forth, back and forth, back and forth, running to get to the job, to pay the bills, go get more money, go pay the bills, and the cycle never ends. So if you want to break the cycle, you have to learn how to make money without trading time. Logic, right? Now, the only way to do that is investing in income-producing assets that pay you every single month. My favorite one is real estate. Multifamily income real estate that pays you no matter what. You get the rent, and then you don't have to trade the time for money. If you can get enough of that rent or enough of that income, you no longer are required to work. You get the money from those deals, and you don't have to trade the time anymore. You can go put your time into what you want to do. Now, in order to do that, you do need to have capital. You will have to save money. We've talked about this. So here's the thing. We already know that you need to earn the money before you can save it. We already know that you need to invest the money in order to get the passive income. I want to talk about what you do in the middle, which is saving. Mostly focused on where. Where are you saving? See, right now you're saving in the bank. If you're going to do a real estate deal, you give your money to the bank because you believe it's safe and it's liquid and it's accessible. A couple problems. It's not safe. Another problem, it's not liquid. If they decide they don't want to give you their money, because if that's what it is at that point, they've lent it out to 10 different people, they don't have to. And then another thing, they're not paying you. So you're not earning anything. So you give your money to the bank. When you go to a real estate deal, you pull the money out of the bank, put it in the deal. Logically speaking, the money no longer grows in the bank. And they're only paying you like 0.10% anyways. That's beside the point. Logically speaking though, if the money's not in the bank, it can't keep growing because it's now in a real estate deal. Right? We're on the same page with that. Money that's not there can't earn an interest rate because it's over here earning a deal, money inside the deal anyways. Now, if you do life insurance, you save it just like you do in the bank. You put money into it every single month. It's liquid if it's structured properly. Just like in the bank, it pays you a 6 to 8% dividend, unlike the bank. It's tax-free, unlike the bank. When you go use it for a real estate deal, here's the secret. When you pull the money out to go put it in the deal, they keep paying you like the money is still there. Let me repeat that. You have $100,000 in your account. You take your $100,000 and you stick it in a real estate deal. Any logical sequence would say, well, the money's not in the account anymore, so it couldn't keep growing because you pulled it out. Nuh-uh, not with life insurance. You pull the money out. Instead of pulling it out, you borrow against it. It's called collateralizing. You borrow against it, and you use the money that you borrowed to go pay the real estate deal and get the income. Because you borrowed, your money never left the account. So you're still earning that 6 to 8% dividend. Simultaneously, you're earning 8 to 12% in a real estate deal. That, ladies and gentlemen, is called fractional reserve banking, which is what happens to your money when you put it in the bank because they loan it out to 10 other people. So, do you want to keep sticking your money in the bank where they do that to you and pay you nothing? Or do you want to put the money in the life insurance where you can do that with yourself and leverage where your money grows into 2 locations at the same time? That's what you want to be focused on. That's what I wanted to share today. I wrote an article about this, by the way. It's beautiful. I want you to read it. It's just for you. Check it out. Like, share, subscribe. Thank you for watching. I'll talk to you next time.